Wendy's stock ticker WEN, is currently trading at $23.08 per share, and the company recently released some major news. We can see they are doubling their dividend payment to 25 cents a share, and they also announced a $500 million stock buyback plan. This is great news if you are a Wendy's shareholder, and if it's a company you're interested in, it definitely makes it a lot more attractive. The dividend yield for this company before this dividend increase was around 2.2%, but it's now sitting much closer to 4.5%, so that's a much better starting dividend yield. So in this video, we're going to be jumping over to our stock valuation spreadsheet to see if we can find the intrinsic value of Wendy's. We'll be looking at different valuations such as Graham's valuation, discounted cash flow multiples, and dividend discount model. And all of this will roll into our output tab. So let's go ahead and jump over to our stock screener. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. But okay, let's go ahead and come up here and we will plug in the stock ticker for Wendy's and hit enter. And you can see all of this data will automatically load in. Now we're currently looking at a 1,000-day change. Let's go ahead and zoom in and look at a 365-day change. And you can see there was a dip, but it did bounce back close to where it was trading at about a year ago. If we come over here, we can see the dividend data has not yet been updated. So if we jump over to Seeking Alpha, we can see that their dividend yield at its current trading price with the dividend increase is really closer to about 4.33%. So again, good starting dividend yield, but that also means the payout ratio has not yet been updated after this dividend increase. So we can't really use this data, but we will come back and look at it later. If we come down here, we can see analysts currently have a target price of $24.57 per share, institutional ownership pretty close to 72%, and the beta is sitting at 0.9. So you should see a little bit less volatility than that of the market. But let's go ahead and jump over to our first valuation, and that's going to be Graham's valuation. And we'll go ahead and zoom in, and we can see the formula Benjamin Graham lays out for us to calculate intrinsic value. So we need our earnings per share. We need our growth rate projection. We're going to take the average yield of AAA corporate bonds, and we're going to multiply all those numbers together. Once we've done that, you can see we're going to take the current yield on AAA corporate bonds, which is 4.37, and this gives us an intrinsic value of $14.89. Now that is quite a bit lower than the current trading price for the company. So they do have a good growth rate projection, but I think the low earnings per share is going to drive down this valuation a little bit. And also the current yield on AAA corporate bonds is going to drive down this valuation a little bit. About a year ago, this was sitting at about 2.8. So if I enter there, you can see based off of that, our intrinsic value is right in line with the current trading price. So definitely current market conditions are going to drive down this valuation model just a little bit. But let's go ahead and jump over and look at our discounted cash flow analysis. And essentially what we're doing is we're plugging in the historical free cash flow for Wendy's so we can see our year-over-year growth rates, which is about 21.4%. Once we've seen that, we can project a growth rate to the future free cash flows of the company. And you can see in this scenario, I applied a 10.5% growth rate to the future free cash flows of the company and also the terminal value, which is the sum of all the future free cash flows past the year 2030. I then found the present value of those future free cash flows and added them together here, added the company's cash and cash equivalents, and subtracted out their total debt to get that equity value. Once I had that, I divided by the number of shares outstanding and came to a discounted cash flow price per share of $26.04. That's a decent bit higher than the current trading price. Now let's go ahead and jump over to our multiples valuation. And essentially what we're doing is using a price to earnings multiple, we're seeing how the market is valuing companies that are similar in structure to Wendy's. So you can see we're taking companies like Yum Brands, McDonald's, Domino's Pizza, and QSR. We're taking their stock price, dividing by the earnings per share to get their price to earnings multiple. Once we have that number, we take the average price to earnings multiple and multiply by Wendy's earnings per share, which is 0.87, and that gives us an intrinsic value of 24.43. So that is pretty close to its current trading price. And one of the things you will notice is all of these companies do trade at a pretty high price to earnings multiple. If we jump over to the stock screener, we can see Wendy's is currently sitting at a 26.62 price to earnings multiple. So according to that, it may be slightly undervalued, but it is trading pretty close to fair value. Now, the last thing that we do want to look at, and it's going to be a big one after this huge news, it's going to be the dividend discount model. So we can see the quarterly dividend payouts that we are expecting, and this gives us our yearly dividend payouts, and this allows us to see our year-over-year dividend growth. Now, they had a huge decrease around 2020, as you can see right here, a pretty large increase after that, a 4.17% increase, and now the most recent dividend increase, 100%. That is pretty unbelievable. Over that time period, it's an average growth rate of 33.48. Now, that's not a true representation of how much the company has grown its dividend because obviously it's kind of jumped around all over the place. So moving forward, I'm projecting a growth rate of 5.25% and a discount rate of 8.5%, which gives us a dividend discount model price per share of $32.38 per share. Now we need to dig into this dividend a little bit more because there's more you need to know about Wendy's dividend than just simply looking at the dividend discount model. So if we jump back over to Seeking Alpha, you're going to notice they give them pretty bad dividend grades, as we can see: dividend safety F, dividend growth F, dividend yield C, and dividend consistency D. I would argue that the dividend yield grade should be a little bit higher because I think the 4% starting dividend yield is pretty solid. But something I do want to look at is if we jump over to our dividend history tab here, and we scroll down, we can see consecutive years of dividend payments, 19 years. That's a pretty good track record, but consecutive years of dividend growth, only 2 years. So if we come over here and zoom out and look at the max period of dividend payments, we can see over the past 20 years, there has been multiple occasions where Wendy's has reduced its dividend by pretty large amounts. If we come over here, we can see they were paying out about 17 cents per quarter around 2008. They cut that almost in half at 8 cents, and they cut it again. So that is a huge red flag. It looks like when there was bad economic conditions, they did cut their dividend, and we saw that happen again in 2020. So if you're looking for a very consistent company that's going to continue to grow its dividends over time, I wouldn't feel comfortable investing in this company. That's definitely a little bit of a concern for me. Now, one thing we do want to check is going to be the payout ratio, because like I said, if we jump back over to our stock screener on our valuation tab, this is no longer going to be accurate since they increased their dividends. So I do want to look if they have growing revenues, growing gross profits, and growing income, because that's where your dividends are going to be paid out. So we're currently looking at the income statement on Seeking Alpha. If we scroll down, we can see we have seen a little bit of growth from their revenues over the past few years, which is something we do need to see. The same thing is true with gross profit, but the last thing we definitely want to look at is our net income, because if they don't have good growing net income, they won't be able to sustain that type of dividend growth. So we'll go ahead and scroll down and we can see net income listed right here. And it looks like over the past few years, they have seen pretty healthy levels of income growth from January of 2021 at 117.8 to January of 2022, 200.4. So in my opinion, I do think the dividend is currently safe, but the huge red flag is how they aren't afraid to decrease the amount they pay in dividends if there is bad market conditions. But let's go ahead and jump over to our output tab, and we can see we came to grams at 14.89, multiples at 24.43, discounted cash flow at 26.04, and dividend discount model at 32.38. And when we average those four together, we come to an intrinsic value of $24.44. Now the current trading price for this company is about $23.08. But let's say we apply a 10% margin of safety. Based upon that, our acceptable buy price is around $21.99. So it's not quite within our buy range. So there's no doubt this company is a lot more attractive with the recent news, but I'm not really interested in this company for a couple of different reasons. The main reason is when we looked at that dividend history tab, I really don't like to see companies decreasing their dividend by that much on multiple occasions. For me, I'm looking to buy and hold companies for the long term and buy companies that continue to increase their dividends over time. So it really doesn't fit in with my dividend investing goals. But there you go. There's a stock analysis on Wendy's. Go ahead and let me know what you think of this company in the comments down below if you plan on buying or selling. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.